Okay. Financial accounting, general ledger accounting, master data, GL accounts, preparations, account group, T59X. Okay, we have already made this. Fine. Define retained earnings account, T59X. Okay, 20,000 is already maintained. Good. Next is basically business transactions. Business transactions, document splitting, classify documents for splitting, double A for two. Okay, I will copy all this. Now, what is document splitting? I will explain that later. But Control Y, Control C. Okay, I go back. No. Classify GL accounts, T59X. New entries. Okay, I take this. Okay, enter. Okay, save. T59X. So what is document splitting? Document splitting is a very simple concept. It relates to segment reporting. What happens is that when you purchase material or stock from vendor, um, there is input sales tax and withholding tax payable. Okay. But for example, if $10,000 of material was acquired, 9,700 something was vendor payable, input sales tax, let's say 100, and withholding tax, let's say this was 200, and this was 100. Okay. But what happens is that uh, out of this material, uh, profit center processing, profit center processing takes 3,000 of this material. Profit center of sampling takes it about 1,500, or let's say 4,000. Profit center QA will take the rest. Okay, that is 3,000. But what happens to the input sales tax and payable? This also has to be distributed among profit center. But it is not distributed. document splitting, what it does, it basically splits the entries between vendor, withholding tax, sales tax based on profit center. Okay. So if profit center processing is taking the material, processing is taking the material, so it will be material processing 3000 and vendor payable will be similarly adjusted. How much? Three times, yeah? Three times. So that will be like 27, for example, 2700. Sales tax will be adjusted similarly like 20, and withholding tax also will be adjusted like 10 or maybe 4, something like that. So every profit center will have a document to show, and it will be split between profit centers. This is document splitting. That's it. What happened to the server? So document splitting is very important to understand as a concept that I've already told you. Okay, so what we do actually is we have given GL ranges from this range to this range, and it will be treated as what item in document splitting and so on. So we actually look at GL accounts like vendors, withholding tax, material as primary basis for splitting, like vendor items, withholding tax items, profit center, sorry, material items on the basis of profit center. Okay. So what happened? Server is very slow. So you actually give them, for example, this can be assets. This is the asset category. This is the balance sheet category. This is the vendor category. This is tax category. For example, this can be withholding tax. This can be sales tax or income and expenses. Okay. So in this way, you actually are telling SAP that, okay, this range and this range will be treated as assets, or this range will be treated as a balance sheet account or income account or tax account or and so on. Okay. So you actually give the whole range of your chart of accounts and give them the treatment. You tell SAP what to treat these number ranges with. Either you treat them as assets, profit centers, or whatever. Yeah, got it? I hope that's clear.
अच्छा थोड़ा सा मैं अली साहब यहाँ से एक पॉइंट देखना चाहूँगा।
Okay, let's go to document splitting. I guess we missed that configuration somehow. Financial accounting, general ledger accounting. T59X. Okay, we have already, yeah, it has already saved it. Okay, now over here we have number range for accounts, GL accounts, fixed assets, cash account, balance sheet, revenue, and this is coming from chart of accounts. Okay, expenses, and these values are given by default from SAP. This range is for vendors, this range is for material, and we will have a range for withholding tax and tax on sales and purchases as well. Okay. Now, one thing that is special GL. Now, what is special GL? Let me explain that to you as well. Special GL. What is special GL? Special GL is when you establish business relationship with vendor. Vendor asks for advance or security. So that transactions are secure. Okay. In SAP, advances are treated separately in special GLs. The reason being because against advance payment, there is no exchange of material, okay, or services or whatever. Advance payment is just a security. So the advance payment is basically debiting your vendor. An advance payment is basically um, a receivable, okay, and it's a payable for vendor if he does not honor his services, okay. So speaking of, and since because there is no material involved with the advance payment, special GL, what it does, it actually divides this process in three steps. One is request for advance to vendor, okay. This is cash, sorry, this is advance cash. Because the entries, there are more entries. Okay, request for advance to vendor, then clearing of advance to vendor, then adjustment of advance against vendor credit. Okay. So request for advance, this does not produce any financial transaction. It does produce, but it is single line item. And the same single line item is cleared. So there is no additional financial transaction. So you are basically just changing the status of this single line item from paid to cleared, and that when it is cleared, it is adjusted with vendor credit or vendor payable. The payable we have to pay. Okay. So when you then establish purchase material to vendor, that credit that stands 10,000, for example, is adjusted with the advance that you paid 3,000, and the payable that remains is 7,000. Okay, because you have already paid. So in the three steps are carried out in special GL sub module of FI. And when it is cleared from here in this special GL, it is transferred to FI against vendor credit. Okay. This is what is basically the function of special GL. So special GL are part of your receivables and payables, but they are not directly payable until they are cleared. So that's why when you actually place an order to vendor to supply you a material, you have to split the special GL as well because it is separate. It is functioning, operating in another module until it is cleared and brought up against the vendor. So since this is separate, not part of FI, that's why we actually give this tick mark. Okay. So this tick mark means override. Okay. Override over here means that this special GL will give consideration to the vendor item to see whether it can be split between profit centers. If it is splitting, then it will also take the benefit of splitting. So special GL will be split between profit centers. So we'll study this, okay, in detail. So we have actually configured this, and we have to also define a zero balance clearing account. For that, FS00. Just a second, Bilal, so I'll give you the option. Give me 1 second before I clear this zero balance clearing account first. Let me configure that because it is very important. Okay, AA42 zero balance is 80250. Okay. Zero balance clearing account, and we will configure it at 3-4 places. Standard account 000, double click chart of accounts T59X, new entries 80250, save. Oh. 59X, continue. Save in gram micro. 80250. Save. Okay. CO primary, posting primary zero balance for controlling, for costing accounts. This is primary accounts. New entries, GL accounts 80. We'll keep the same 80250. Save. Zero balance for cash pooling. New entries 80250. Save. Okay, let's stop over here because after this we'll start with front end entries.